In the previous session, we discussed how to download the financial statements for your company from the website moneycontrol.com. This is specifically for the accounting for manager assignment, although this activity can be done for any sort of fundamental analysis that you want to do from Money Control website. In this session, let us continue with that discussion and take a look at, now that we have downloaded the raw data, how do we clean that data in a way that looks good for the purpose of our analysis. So what we are going to do is we are going to clean that data, and we are going to see what are the steps required in cleaning the data and what are the kind of items that you should mix where if you want to clean your data properly. So let me quickly share my screen and we'll start with this. So let me share the complete screen. Okay. So let's go to this. Right. So this is the financial statement that we have downloaded for the company Indigo Airlines, the balance sheet and the P&L statement. First things first, what you would notice here is that the financial statement for Indigo Airlines are in a reverse chronological order, which means they're starting from March 25 and then going March 24, 23, 22, 21. What we want, at least for the purpose of the analysis that we were doing in the classroom, is 21, 22, 23, 24, 25. So the first step that you would need to do after downloading the data is to select these columns, cut them and paste them right at the very front. So insert cut cells, March 21, same thing, right click, cut, insert cut cells, March 22, same thing for 23, Control X and insert cut cells. There is an Excel shortcut also, but I really don't want to discuss that right now because that was a bit confusing and it may actually make you a little more confused. So we have the data here. Now this rupees crore that they have shown, Money Control, is only on this particular cell, as you can see. So we can do a right click, cut and paste it here, and that should be good to go. So we have the data now, March 21, 22, 23, 24, 25. This is for the balance sheet. We will have to repeat the same exercise for the profit and loss statement as well. So you will have to do this exact same exercise for the P&L statement as well. So let me quickly do that, and we will then move on to slightly a little more nuances about the data analysis. So let's see, cut, won't take much. And finally, let's me do Control X and Control V here. Okay, simple, done. So finally, we have the financial statements, both balance sheet and P&L for Indigo Airlines in the format 21, 22, 23, 24, 25. This is exactly the way we want it. The latest year at the end, the earliest year in the beginning. So this is one thing. Next, now if you look at the balance sheet, there is not much to discuss in the balance sheet as such for Indigo Airlines, at least, because this is a clean balance sheet. It is as good as a standalone company. It is consolidated balance sheet, but the consolidated statements, the consolidated subsidiaries are also a part of the company 100%. So there is no minority interest. There is no, other kind of equity related items or even asset related items. So in terms of balance sheet, in terms of at least data, we don't need to discuss much. Let me at least go to the P&L and let's take a look at what are some of the key points that we see in the P&L. First thing is the total revenue. So when you see revenue from operations gross, revenue from operations net, other operating revenues, total operating revenues, other income, and total revenue. So first thing, if you recall, in our analysis that we did in the classroom, we started from revenue from operations and then we subtracted material costs, employee costs, other expenses, and so on. So when we are doing the same exercise here, we are focusing on the total operating revenues and not the gross net other revenues and so on. Okay, so total operating revenues. So this is the revenue that is there in the company's balance sheet. In fact, if you see the numbers 14,640, 8802, we will find the same 14,640 to 8802. So this is the exact same revenue from operations. This is the data that we are concerned with. That's number one. Number two, other income goes same ways into the non-operating income component after the EBIT. So that structure is going to be exactly the same. Next, we have the direct material costs, which in this case are the aircraft fuel expenses, lease rentals, operating direct expenses, and change in inventory. So all these four items combined is our material cost. This is exactly the same way that we discussed in the class. We have employee benefit, finance cost, which is interest expense, depreciation, amortization, other expenses, total expenses. So this structure, after that, there isn't much, honestly, because this is the exact same P&L statement that we discussed in the class. The only thing is you need to take the total tax expense and take the sign as it is. If it is negative, it's a refund. If it's a positive, it's a tax that the company has paid to the government. So in this case, minus 5818 minus 11.64 will be minus 5806. So essentially, there is a refund that has come up. So therefore, this is a cash inflow. The tax is an inflow to the company. So therefore, we are adding it up. Okay. So and we are concerned with your profit and loss after MI and associates, after minority interest and associates. Okay. So now for Indigo Airlines, there wasn't much difference, and I get that. And therefore, I thought that let me also show you the data of a company which has uh, data for minority interests, because this is the kind of balance sheet that you would most likely find for your company. So let's start with the basics. So now what I'm showing you is also the balance sheet for Mahindra and Mahindra, which is, as you would know, Mahindra and Mahindra is a popular company in the automobile division in the automobile industry in India. So this is the balance sheet and the P&L statement of Mahindra and Mahindra for the exact same period, consolidated financial statements. Now let me also quickly do this part first. Now I'm doing it slightly fast because I want to show you the main things here. Okay, so this is the balance sheet. Let me also do the same things for the P&L. As you can see, I'm right now using a bit of Excel shortkeys. You can quickly do a ChatGPT search to figure out which Excel shortkeys. No big deal. Okay, now let's come back. Now let's take a look at the balance sheet for Mahindra and Mahindra. Now what you would find here is, and this is something that you may find for your company as well, which is total shareholders fund. So first, so starting with equity and liabilities section, you have the equity share capital, total share capital, which is kind of the same, reserves and surplus, total reserves and surplus, which is also the same, equity stock options, whatever number of options were issued, that gives you the total shareholders funds. At the same time, there is also minority interest. Now, we discussed already what minority interest is. A quick refresher: minority interest is the extent of, let's say, equity in this case, which is not owned in Mahindra and Mahindra's subsidiaries. So whatever subsidiaries Mahindra company has, if you don't own those subsidiaries 100%, there is a certain percentage of the subsidiaries that you don't own. Let's say if I own only 80%, consolidation happens of the entire subsidiary. The remaining 20% is shown as a minority interest. So this minority interest is essentially an all the previous years profits combined of all these subsidiaries combined together. Now in the March 2025, it has come to 12,059 crores. Okay, now when you do the total capital and liability, so first of all, we have the total shareholders funds, we have the minority interest, then we have the total non-current liabilities, total current liabilities. So this is traditional balance sheet structure. Total capital liabilities, this number that you would see, okay, in your balance sheet as well, would be the sum of total shareholders funds, total non-current liabilities, total current liabilities, and minority interest. So you'll have to add this as well when you are doing horizontal vertical analysis, especially in the balance sheet section. So you'll have to add the minority interest. Now you can either add a separate line item, or you can simply include this in the equity and just change the title as equity plus minority interests. Okay, so that option I leave to you entirely. You have that choice. You can have this as equity plus minority interest, you can combine it, or you can add another line item called minority interest. That's totally up to you. So this is from the perspective of the balance sheet that I wanted to discuss. There isn't much difference in assets, at least from the perspective of horizontal, vertical, or trend analysis, because the total non-current asset, total current assets, and total assets still remain the same, even though we have minority interest and all those other things. Okay, so from the balance sheet perspective, this is the one key change that you will find in your company, which was not there in case of Indigo Airlines. Now let's take a look at the P&L. Now in the P&L, first of all, the operating revenue section still remains. So there is revenue from operations, gross, net, other operating revenues, and finally total operating revenues. And then there is other income and total revenue. So we are again concerned with total operating revenues. So this is the number that we are taking for the purpose of horizontal analysis, vertical analysis, and trend analysis and ratio analysis. Total operating revenues. Other income goes after EBIT. That's the first thing. Second thing, in terms of material costs, so material and production costs, it's cost of materials, purchase of stock in trade, change in inventory. These three items combined becomes the material cost now, okay, for this company. So this company, there are only three line items. For your company, as we said, for Indigo Airlines, if you recall, there were four line items: aircraft fuel, aircraft lease, operating direct expenses, change in inventory. So this would, we can see already here, differ from company to company. So you will have to look at your company and figure out whatever is above employee benefit expenses essentially is your material and production cost. Okay, so let's just go by this rule of thumb. So you can take a look at this: cost of materials, purchase of stock in trade, change in inventory. These are the three items that are there as your material and production costs. Then we have employee benefit expenses, finance cost, depreciation, other expenses. This is the same structure. Now there's one more line item which has been added here, which is amount transferred to capital accounts. Okay. Now this is most likely something would have happened as a result of some businesses that they have sold, and therefore there is some profit or loss that had incurred during that time, and that is the amount they have transferred to capital account as a result of that. So because of this, now we have total expenses, which is uh, minus. So all the expenses are there, and you will have to subtract 160 to get total expenses. So in case of, now again, here is a bit of your judgment is required. You can either add this in your other expenses, and it's absolutely fine, because your total expenses in your ratio analysis and also in horizontal and vertical analysis has to be whatever the company is saying. So total expenses has to be this two. Okay, so there's not going to be any problem in horizontal vertical analysis, but in ratio analysis you will have to include these numbers as well. So there's a bit of a judgment required on your part. You can include this in total expenses. So total other expenses will be 14,541 minus 160.74. Okay, and then that will make your total expenses to 70,081. So ये थोड़ा सा a bit of a math and bit of an adjustment you'll have to do on your own. This is item number one. Item number two, exceptional items. Same thing. So now they have this exceptional item line items also. Okay. So when we go to, let me just go to, sorry, let me go to the ratio analysis part. Now here we have not specifically added anything for exceptional item. Okay. Having said that, this is a line item which will come after EBIT. So you can add an exceptional item line item separately and subtract this the way they have done in this case. So they have negative may they have subtracted, positive may they have added. So you can do the exact same way. Okay. So you can add a separate line item, or you can use your own judgment and put it in non-operating income. It's totally up to you. Okay. I leave that as your choice. Like I said, this is not science. Okay. There is a bit of an art involved. Where you put what item is up to you for you to figure out. Total tax is exactly the same. Total tax expense, profit loss before extraordinary items, continuing operations, and discontinuing. Now there's one more line item here, which is discontinuing operations, which is whatever operations, businesses that they have discontinued during the year 2021. So this discontinuing operations has reduced the profit. If you notice, profit from continuing operations is 2425 minus 2189 gives you 235.73. Okay, so your profit has actually gone down as a result of this discontinued operations. Okay, so profit. So when we, again, let me take a step back. When we go back to your ratio analysis, yeah. So you have this after tax, then there is other profit or loss. This other profit or loss is a placeholder for your discontinued operations, basically items which come after tax. Okay, so this is from after tax profit, not before tax. So exceptional items were before tax, but this is after tax. Okay, so you can put this here in other profit or loss, and again do a plus or minus accordingly. Finally, there is minority interest, which is and also share of profit loss of associates. So which is also, a line item here. Okay. So minority interest, whenever this is negative, it is subtracted. Whenever this is positive, it is added. You can use the same judgment and add or subtract these things accordingly. So minority interest, share of profit loss goes here. So you can include either this non-controlling interest, may minority interest, and then other profit may you can add the share of profit and loss as well, or you can add a new line item. Totally up to you. Okay, I leave that to you. At the end of the day, your consolidated profit after minority interest and associates, this number should reflect in your net profit, profit after tax. Okay, this is the final number that belongs to the equity shareholders of the company. This is the profit that you should finally be having at the end of the day. So in between, you can add a new line item or you can club the line items together. Totally your choice. I leave that to you. Okay. And so, like I said, at the end of the day, it should start from total operating revenues and it should end at consolidated profit after minority interest and associates. In between, if you find something that we don't have, add it, subtract it, create a new line item, do whatever you feel like. Just make sure that the numbers are matching. So this is a brief about essentially cleaning the data that we did not discuss in the previous video. So I thought, let me create a separate video about how do you clean and how do you read the data and put it in a format in which you can further do actual analysis. Okay, so this is for this video. I'll see you in the next one. Thank you. Have fun. Bye-bye.